The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading. How's that for an overnight acceleration and a bounce? We reach a low in the S&Ps of about 65.70, and you trade up 100 S&P points from that price level. Boy, things looked a little dicey. At about 4 a.m. Eastern Time, tensions easing. The president calling his own tariffs unreasonable, basically, on a longer-term basis. Unsustainable. The market rebounds from there, and we're flat overnight. You got a little bit of banking fears coming into the market yesterday. Right now, we check around. S&Ps down by 0.1%. It's options expiration today as well, so get ready for a little volatility on Friday. NASDAQ 100, we're down by 0.3%. S&Ps are off 0.1%. Dow positive by 0.1%, up 36 points in the Russell. Took it on the chin yesterday, and today down 0.3%. Bitcoin, it's not stopping, folks. Okay, when the market was catching bids earlier this week, Bitcoin not participating. The bid that we got overnight, nothing near the sell-off that we got. That sell-off last night began at 109.5. Okay, and we only bounced to 106. The market's almost got it all back for that bounce. The S&P's just had a 100-point run. Bitcoin off $3,000 or 2.8%, 105,000. You jump over to Ethereum, off 2.4%. You trade down to 3,600. Folks, Ethereum was just trading at almost $47.99 10 days ago. It's down 1,000, 25% almost on that pullback. You break below on Ethereum, the lows of September. You're in this area of chop that you had back here in late July and August. You're also accelerating into this area that you had from late 2024. The ultimate growth stock, crypto right now. We jump to yields. So you had yields pulling back dramatically as the market was selling off. You had higher price, lower yield. You got all the way up to 114.02. Now, we are sitting at 4% right now. Okay, and let me just see where we actually got to. We're sitting at 4% right now. Wow, we were as low as 3.93 almost in terms of lower yield. We're back to 4%. The market's recalibrating. Some of the trade concerns easing with that 100% deemed by the president himself. And to get over the headline, yeah, banks were in focus, but we get some easing. Not sustainable, looking for the words. So after a week when fears were escalating, Trump told reporters that current tariffs on China were not sustainable and confirmed he's going to meet with Xi in South Korea in the coming weeks. You set a tariff, you call it unsustainable, the market pops, and we get a couple weeks until they meet. But yes, that was the pop there. So you get the acceleration. We're back to 4% right now. On the 10-year, you jump over to the dollar right now, all the way to 98 when we had yields tanking overnight. We're sitting right now with a little bit of a bounce at 98.42. And gold. So last night, $4,392. You see the volatility last night around 8:30. You pop again to that same area, about 43.90. And from there, $90 south. So as you've had the dollar bounce from about 98 to 98.40, right? Gold has pulled back $90. Talk about some volatility, man. $100, one way or the other. Just from the close of yesterday, folks, you basically traded from 4,300 to 4,390 to 4,300 to 4,390 to 4,300. That's from the close of yesterday. So get ready for a volatile session on Friday in gold. You got silver right now. Similar volatility overnight. We're off by $1.40 or 2.6% right now. You jump over to platinum that's been rocking. Okay, the more volatile you were on the way up, the more volatile you're going to be on the way down, folks. Platinum, yeah, How about off $110? Platinum's off 5.4%, $95 on the session. But yeah, you're $110 off those highs. You're below, if anything, you saw Thursday and Wednesday as we trade lower in metals with a little bit of a bounce. And all that is a bounce from 98 in the dollar to 98.45. A strengthening dollar, weakening metals right now. And we go forward from there. So you get a little bit of easing of tensions. The president himself easing off on those China tariffs, and the market rejoices. You get that acceleration. Now, you talk a little bit of banking stocks. Let's jump over to the banking stocks. Yesterday it was Jefferies. Now they get an upgrade today from Oppenheimer, saying they're not as exposed as the market thinks, something to that degree. You trade down to 49, you're up to 51.35. This morning, we'll see how we react on the open. Some of the other banks that were tanking yesterday, Zion, a little bit of a bid in the pre-market, up about $2.50 from $46.93 to $49.28. Western Alliance, it's amazing. All these names come back. I remember them all in terms of that crisis that happened with First Silicon Valley Bank. The difference here is, yes, there could be a systematic problem that they've been pushing loans out to customers that are probably going to default more than they might like the market to think, okay? But the Silicon Valley Bank deal, we discovered overnight that so many of these banks had hold-to-maturity securities where really they had negative equity. Probably not the same scenario, but hey, you never know until it comes out of the woodworks. JP Morgan, quite the sell-off yesterday. The big banks were down big. JP Morgan up slightly this morning. You were down to 293 last night. Bank of America down by, I think, 3.5% yesterday. You're only going to open by 30 pennies. It's quite a sell-off for these big banks yesterday. Citi, right? Citi was down 5% almost intraday yesterday. Jump over to Wells Fargo. They've been the leader. Some strong numbers on Tuesday from Wells Fargo, and you're up $1 in the pre-market this morning. All right. We talk about cuts, and we've been talking about it on this show. You look at the probabilities right now of cuts priced into the market for the meeting going on 12 days from right now, October 29th, and then the probability of the odds December 10th when they meet again, it's almost like 95%. You're going cut right now. That's what priced into this market. But as they say, then things could get cloudy. Okay, there's about a 50-50 shot that they cut again in the January meeting. Steady cuts next year. The Fed, not so sure. Okay, we're going to see. That's when you're going to have some room for movement. October is going to happen, Bullard said. Inflation's remaining high, and the fact that growth looks pretty strong is putting December at risk. Right now, the market doesn't think so whatsoever. So inside the Fed, not surprising. Push for rate cuts led by Waller. He's talking about 25. Mr. Moran's going to be in there now talking about 50. A new voice in the central bank's internal debate. And there's going to be another new voice coming down the line, leading the way as a new chairman or chairwoman in May. But yeah, many cuts priced in, 2 cuts priced in this year alone. And then you get forward to next year, we got some cuts priced into this market. We'll see if inflation becomes a sticky thorn. We'll see how the market reacts. But nonetheless, the volatility and two-way action continues this week. And look at this critical area we're at. We're at the lows of Wednesday with the initial sell-off of where we were yesterday at about 1 p.m. Eastern time, right? Right on that low, and almost right where we opened on Sunday night futures as well. We're coming back, folks. We got a lot to go over. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&P's negative by 7 right now. NASDAQ off by 87 points. Quite the surge higher. And yeah, we're about 90 points from where we were last night, 4 a.m. this morning. Quite the acceleration on President Trump's words that his own tariffs are unsustainable on China. So we go forward from there, but that eases it. And yeah, the rare earth restrictions, I think he's probably hoping, are unsustainable as well. But those are China's restrictions. They have not said that yet, but that is the goal, I'm sure, to ease all of it, right? And we'll see if it happens. Markets, a little bit of a reprieve coming into the opening bell. And yeah, as we mentioned, jumping over to some of these bank stocks. So we're getting a little bit of a rally. Jefferies up to 52 right now. And Bloomberg, so out this morning, talking about the preferred shares of these banks, okay? A fear of that Silicon Valley Bank style turmoil. But it's so different, it feels like, at least on the surface, without having any fundamental understanding of it, okay? That was staring everybody in the face in terms of Silicon Valley Bank, hold-to-maturity securities. I think everybody understood pretty quickly that they didn't actually have equity in their bank. If they had to sell off the assets that offset the loans, they were left with negative equity. And that was a huge, quick problem that had to be remedied. Otherwise, everybody was going to make a run on the bank. And in this day and age, a run on the bank can happen in minutes when you can just wire the money out. Or you can't when they run out of money. But what this talking about, for preferred shares, slumped the most since May 2023. Western Alliance, the most since 2024. The first was Zions. And yeah, preferred suffer on fraud woes. Series A preferred. I mean, these are big slumps, man. Smaller lenders. Look at the big six. Okay. Preferred stock prices Yeah, the rest of the market, these small banks, and even the big banks yesterday. We continue crypto. Get your spikes up on crypto, man. We've been talking about it this week, okay? There's a problem in crypto. Okay, that wipeout that took place last Friday, the market never rebounded this week. Equities rebounded, and for the first time in a long time, crypto just disassociated with the NASDAQ 100. It's trading related, but boy, you are way off, and crypto is much weaker. And yeah, Binance Link token BNB tumbled as much as 11% on Friday, the world's largest crypto exchange, cited by analysts as a key driver for that record spree of liquidations that had last Friday. Okay, now I was saying yesterday to friends, the last thing he wants a banking crisis, folks, right? That should really get your spikes up. I mean, we have a valuation crisis with some of the AI. I think you'll be okay because the companies behind those are real companies. You got a banking issue, man. That is a bigger problem for obvious reasons. Bitcoin has traded lower all week. It can't recover. Investors selling 600 million of U.S. Bitcoin and Ether exchange-traded funds on Thursday. The put-call ratio to Bitcoin on the crypto derivatives platform Deribit rose to 1.33. You got increased hedging. Bitcoin is never going away, folks. Crypto has changed the world, and it has forever, and it's never going away. But something you do have to ask yourself, okay, and listen, I own some crypto in the form of IBIT, okay, one of the ETFs out there. But something you do got to be aware of is that what I find myself saying is, okay, Bitcoin's never going away. If you want some Bitcoin to be able to trade it for value, etc., why does Bitcoin need to be at 105,000 versus 10,000 when you can buy 1/1,000,000th of a Bitcoin practically, right? You can buy a decimal point of a decimal point of a decimal point. Why does that value intrinsically have to be 105,000 per Bitcoin, and why do I need to receive X amount of decimal points versus why can't it be 10,000? And yes, the answer is, well, supply and demand, right? Demand, supply, economics, where do the curves meet? But it is something to consider because it doesn't mean it has to go away. But Bitcoin could be totally functional at 60,000, just like it was a year ago. It could be totally functional at 26,000 in a thriving crypto environment, just like it was 2 years ago, folks. Okay? There is that risk out there. It could be thriving at 1,000,000. 1,000,000 makes just as much sense as 100,000 does, as much as 10,000 does, because you can still buy the decimal points everywhere. And so that is one of the factors. Now, you say, well, everybody should have Bitcoin in their portfolio. Well, everybody can have Bitcoin in their portfolio. You're just going to have a smaller decimal point or a larger decimal point. You still have it. You still can sell it. What's it actually intrinsically worth? Nobody really knows. All right, let's jump around to some of the leaders. You jump over to NVIDIA shares. Quite a rocket ship on the monthly this morning. We're slightly in the red by about $2 to 179 and change. We get the NASDAQ 100 off about 73 points with 5 minutes to go until the opening bell. Microsoft slightly in the red as well. Amazon trades lower yesterday. We're trading flat right now at 214 and change. So Apple's going to be airing the F1, folks. F1 racing, all of them. They signed a deal, I believe, for the next 5 years. I saw that chopping around at Apple TV. If you want to watch F1 racing, yeah, 5-year media deal bringing all races to Apple TV streaming in the U.S. And I tell you, a couple times recently, now I watched that F1 racing show on Netflix, which I enjoyed. Pretty much introduced me to the sport, like many. You become familiar with the drivers. And what I found is I wake up in the mornings early, right? So I'll wake up on the weekends. It'll be like 6 o'clock, okay, on the weekend, 6 a.m., 6:30. I jump in my office. I'm having some coffee, right? Starting it off early, taking a look. Maybe go pull up a little ESPN, watch a little college football pregame or something like that. But it's too early for even that on Saturday morning. So what's on ESPN Sunday morning as well? F1 racing. Yeah, they got it live because it's going on in Europe where it's already race day. And so I enjoy that. Yeah, live sports even earlier. ESPN had been the most recent broadcaster, so if you're part of the Disney or ESPN package, you can get that, but not anymore. $140 million a year for the F1 rights. And in the stage of live sports being billions and billions of billions of dollars, $140 million doesn't seem that bad for a year. ESPN had been paying $85 million a year. So Apple TV, actually one of the services I don't think I own right now, remarkably. So I put that on, I'm 5 years removed from a new iPhone. That'll get me some new Apple TV when I eventually re-up on an iPhone. Apple, flat right now at $247. Markets in the red. We're coming back for the opening bell, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps, negative 15 points on the open, a little bit of selling coming in and a few points. And yeah, we're at 66.50, far removed from the 65.70 overnight, but markets in the red. NASDAQ 100 down about 98 points on the open, off about 0.4%. The Dow barely in the red by 0.6% right now. 0.06. So we'll call the Dow flat right now, and the Russell down 0.8%. All right, that regional banking index, we're trading lower on the open. Jeffries, though, quite a pop, up by 5.5%. We keep our eye on those banks from yesterday. Zion, up by 2.8%, but we get some selling around the open as well. Western Alliance, up by 2%. You check in on some of the other banks. The bigger ones, JP Morgan, were flat this morning. Quite a sell-off yesterday. No bounce this morning. Bank of America, they were one of the most pronounced. You're up by 1.1%. Citi, flat this morning. Wells Fargo, up by 0.4%. Goldman, even after that slide yesterday, you were trading at 780 yesterday in Goldman. You're at 750. Whew. Morgan Stanley, some strong numbers this week. We're up by 0.3%. We check in on some of the chip stocks. NVIDIA, down by 0.6% right now. AMD shares slightly in the red. Broadcom off by 1.8%. We check in on Apple. There you go, up by 0.6% for Apple shares, trading in the green. One of the few spotlights, Apple shares. So Dow, positive. Is that recalibrated? Let's see. Sometimes those market watch. Yeah, CRM up by 0.6. No, that's not going to be. Yeah, I don't know. Sometimes this takes a while. Do I have to reset this? This hasn't recalibrated yet. I don't know how this happens sometimes. It's still talking about yesterday numbers where it has CRM up by 4%. Be careful doing that, folks. If you're ever in the Thinkorswim platform, for some reason, this market watch, you see what's moving, that's yesterday's action, not today for some reason. Let's jump over to Walmart. Quite the trade lower yesterday. We're flat right now. Walmart shares trading at 106. Quite the acceleration for Walmart this week, though. They're going to be ChatGPT. You're going to be able to buy anything instantly on Walmart. All right. Let's talk about global growth. So the IMF, they're worried about the risk to growth from the U.S. and China. Significant downside risk to global growth due to renewed frictions between the U.S. and China. That's the fund's director of Asia and Pacific Department said today, after months, tensions flared recently. Yeah, if these risks materialize in greater tariffs and disruption in supply chains, then growth could be lowered by 0.3 points. If there are further tensions, that would also mean downside risks for China. And yeah, Treasury Secretary, I believe he's meeting with those officials today, correct? Let's pull it up. And we're going to talk about the Treasury Secretary as well. I believe so. Yeah, so he's meeting with his Chinese trade counterpart today. There you go. He's going to speak, not meet, excuse me. He's going to speak with him on Friday. Chinese Vice Premier. The conversation could signal progress. But nonetheless, Trump and Xi are going to meet in a couple weeks when they're both in South Korea. And Trump is setting the stage for an unsustainable U.S. tariff, and I'm guessing that means hopefully an unsustainable rare earth policy from China as well. You know, there's a great article from Bloomberg on the opinion side I was reading earlier this morning. Yeah, I was like right after 6 a.m. this morning. And, you know, the Treasury Secretary worked with Soros when they took on the Bank of England. And it's remarkable because he has made so much of his cash in currencies. And yeah, the basic premise here is that he's applying that playbook to Argentina, using his experience as an asset manager, investing in the future of Argentina. They have the $20 billion currency swap. And what this gets into, it's an opinion piece that, yeah, you better believe that politics are intertwined with economic policy. We only get about 1% of our agriculture from them. So in terms of trade, not very important, okay? But when you're talking about regional economic stability, you're talking about politics, you're talking about allies, it all plays into it. So you have a $20 billion currency swap. This has occurred before. Mexico is what they tie it back into when you had Clinton there. Now, they were trying to push NAFTA through. Mexico, a much more important trade partner, of course. You had the peso crisis of 94 and 95. They tried to push through a big bill through Congress. They had a huge rescue package. That didn't work, so they went to a plan B, which was a stabilization fund where the Treasury Secretary had broad discretion. Sound familiar? In the case of Argentina, yeah, things get a little bit more political than the economic tie-in from Mexico in the middle of the 90s. But yeah, in 92, he was with Soros. Druckenmiller, and as we all now know, that pound taking on the Bank of England. And yeah, they figured out that there was no way that peg had to hold. They shorted the pound. I think Soros had $10 billion. They made $1 billion on that trade alone. So he's very familiar when it comes to currencies. And we'll see how that one plays out. But they're going to need more than $20 billion, as they're already lining up another $20 billion for financing. Jump around to some of the other equities. Meta shares off by 0.3%. Alibaba, particularly volatile overnight. When you talk about U.S. and China, down to 158. We're off by 1.4% right now. We check back in on yields. Chopping around right near 4% on the 10-year. Take a look at the dollar right now. We bounced to 98.42. All right. I was up early this morning, folks, and I was saying, seems like we're getting pretty parabolic on gold right now, and I am not short in gold, okay? And I still have gold equities that I plan on holding on the long term. But on a shorter term basis, folks, we're $120 off the highs. $120 off the highs. We just traded up $120 in the last 24 hours. Look at the selling coming into this market right now. Okay, get your spikes up in gold, folks. 12,100 contracts. This is a 5-minute bar. What are we into it? We still got 2 full minutes. Oh, man, they got some selling going on in gold right now as the market rejoices and trades higher. Look at this market, man. So you drive below the lows we had last night, and this is a huge volume bar. We're pushing 15,000 contracts on a 5-minute basis right now, okay? And just to show you, I just put this chart on an hourly. I just told you, we're pushing 15,000 contracts on a 5-minute basis. On an hourly basis, you're not trading 15,000 contracts, all right? Somebody put in the den yesterday, rightfully so, they said when my dad would say, okay, 200,000 contracts was a big day for gold. Well, folks, we're trading 15,000 contracts in 5 minutes. As gold sells off, we're down by $20. We're coming back. Markets flat. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And so, yeah, you push it to a 15-minute bar, and you're talking about right now, folks, and we are only 12 minutes into it, 23,000 contracts. Now, we got a little bit of a bounce going. Gold gets all the way down to 42.68, just like that, with 32 points off the low. We'll put it on a 1 minute, and you can see. No, that's a 5. I want the 1 minute. You can see that it really accelerated at 9:35. Okay, you did over 6,600 contracts. Somebody was getting out as gold approached 4,300, and we're right back to that area right now. You take a look at the daily. Okay, great question in the Tigers Den. And I was talking about my dad, the volume. You think he'd be short in this market? I never know what he'd be doing, folks, of course. But when I'm looking at this market right now, there's too much volume to the upside. Had a great conversation with our man Tim Ord yesterday. You know, you look at this weekly, folks. Okay, look at the weekly bar we're in. Look at that weekly bar we are in. Tough to step in front of that train. Now, hey, we're $100 off the high. Okay, on a weekly basis, you better believe you're strong like bull. You did 1.7 million contracts last week, and I bet you're going to break it today. In terms of the weekly, what we get this week, you're right there, and today's probably going to be a big one with this type of action on gold. Now, you put it on the daily, and yeah, you got some selling around that 4,000 price point. And you may have some selling today as well. We've already done 350,000 contracts. And yeah, we are. So you add up the weekly volume on gold right now, 300 plus 400 plus 300. So that's 1 million contracts in the first 3 days. You do 350, so we're at 1.35. So we only need about 350,000 contracts. We are already at last week's weekly volume on gold. Okay? The volume on gold is already right here. And that's your weekly bar. So be careful stepping in front of this train. But guess what? On a shorter term basis, all right, yeah, you better believe there might be some warnings out here, because we have some selling on October 9th, and today's going to be a massive day, man. It's 9:45 in the morning, and we've already done 350,000 contracts. All right, and that is some selling, folks. You jump over to silver. The selling is even more pronounced because silver was actually negative on Tuesday when the gold market was higher. And silver right now, not quite where we were yesterday in contract volume at about 100,000 contracts. But yeah, we got some silver selling as well. And yeah, talking about Bitcoin, man. Folks, I had this line on my chart for a long time. Okay, 110,000, critical area. You're talking about the areas of the highs last year, about 109,000 in December of 2024, 110,000 in January, 112,000 in May. You pull back and test a low of 108,000 in September. You test a low of 108,000 in September. And we're breaking through that area now. Okay, we're at 105,455. And yeah, it's the talking about in the Tiger's Den as well. Okay. MicroStrategy. Oh, yeah. JK, you better believe it. If you're in MicroStrategy, be extra careful. Okay, I'm telling you, be careful in crypto. MicroStrategy, you're in a leverage of a crypto. MicroStrategy, folks, you're in a losing position for anybody, okay, outside of the few times you ticked lower from late March to early April, so they're in there, right? But most of what you're in MicroStrategy, anybody who bought after the election is in a losing position in MicroStrategy. Let alone the highs of 543. This is a weekly. You were chopping around the 400s for a full month. You were back up to 430 in May. You were as high as 457 in July. And now we're at 283 for MicroStrategy. And yeah, you are now within the gap. Okay? The low of the weekly bar of November 11th is 293. We're at 283. Okay? You're about to fill that gap. All right, let's take a look at Verizon for a question from one of our Tigers in the den. Entry for Verizon and Target yielding 7%, so it caught my attention. The way I'm looking at Verizon right now they have a new CEO. Okay, this volatility that you got last week, you check out the CEO or is it the co-CEO? This was news to do with their CEO, I believe. Is it? I was looking at it. Yeah, the shakeup. That was their, let's see. Yeah, I believe that's when they had a new, was it CEO or co-CEOs? Nonetheless, the stock's been under pressure. You take a look at the 5-year weekly. We cut a nice bounce with a market low in October of 2023. You accelerate with the market. You reach a high of $47 earlier this year. And yeah, on a dividend basis, folks, you're getting $1.22 every quarter for a $40 stock. Okay? Jump over the Analyze tab. You're talking about a company currently valued at $170 billion. They got 4.2 billion shares outstanding. Okay? And you're getting $1.22 every quarter, or you're getting about, look at, did they change that? They must have, right? Now you're getting 70 cents. Yeah, what I was going to say is be careful on this one, okay? And if you're going to get into it, double broad, set a line in the sand here. And maybe it's this line in the sand to where we just were. Because I wouldn't give this a lot, man. My mom worked for Verizon for decades and retired a few years back. She was a union employee, fortunate to get out with a decent retirement package so that they could replace everybody with lower wage workers with basically no retirement on top of it. And on trades like this, okay, look at this weekly. You have massive volume, okay? All I do is I draw a line in the sand. When you're coming in technically to an area like this, you really do not want to see this thing break below $40, okay? That's the highs at the beginning of 2023. You had a year of consolidation in 2024. It's a very important technical area. And yeah, their new CEO is a PayPal guy. That's right. So, maybe draw a line in the sand. You really want to give yourself some room. Maybe give yourself to the beginning of the year. But boy, there's some selling, man. You look at the highs we had selling, and the market did not rejoice last week, trading down dramatically on a daily basis. Look at that escalation, man. Just didn't stop. From $44 down to 39. And so just, a 7% dividend is dicey. I mean, attractive, right? I was going to say spicy. But boy, this equity just ripped down 10% in the last 10 days. So I'd be careful. Draw a line in the sand. Because on a longer term basis, they may have some issues, man. Okay, look at that monthly chart. Look at that monthly chart. Doesn't scream strength, man. Okay, if anything, looks like you're rolling over to come back to test the 31. All right, S&P is chopping around near flat. We're negative by 3 points. NASDAQ negative by 44. Dow in positive territory. We'll come back, folks. We'll take a look at some other equities. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Look at this market. We're almost green across the board. Russell lagging a bit. Russell's been under pressure. Those regional banks. S&P's up 10.6677. We're above anywhere we were pre-market. You got some bids coming in. Look at this action on the NASDAQ 100. Now, you're not doing it with volume. In terms of the opening bell, volume dripping off a bit. But yes, we're plowing higher. NASDAQ up by 1/10. Dow up by 0.4% right now. And let's take a look at Pfizer from Melody and the YouTube Tigers Den. And the question is, and I'm sure we've all considered it, ready for a buy for Pfizer? And has it finally taken all the hits from their past? Well, I don't know. This one looks a little dicey. Melody, you take a look at the monthly. Okay, the one thing that's sticking out here is we did have a little bit of a bid in September volume. Okay, and that bid on September volume, if you zoom in on the weekly, was the week of September 29th. Okay, and you zoom in on the daily, you got this huge acceleration, September 30th into October 1st. Now, we've given back all of that, though, which is remarkable. I would probably draw a line in the sand from where we started this bid. You know, you trade below here. Maybe you want to give yourself down to the lows that we had from this day of bid, this gap getting filled You set your number somewhere below 23.17. Don't pick out a round number. If you're going to put it there, maybe you give yourself a little bit more room to the downside. But yeah, 23.11. You break below that, this thing could be back to $20.92. You take a look at the monthly. What's dicey here, that is a tough chart to look at monthly, man. You got these volume at the lows of April. We've bounced. The one thing out there is that line in the sand that we had from that September trading. And, it almost looks like Verizon, right? These two equities, longer term, tough looking charts, man. So, yeah, it seems attractive maybe when you're getting into some of these equities at prices you traded at 28 years ago, like Verizon. And boy, Pfizer, same deal. Remarkable, but be careful. Draw a line in the sand. All right, folks, thanks so much for tuning in. How about it? We got markets. We're green in the NASDAQ, S&P, and Dow, and we'll finish it up with gold. 42.98. Stay tuned, folks. Basil's coming up right now. Have a great one, folks.